Howdy, ladies and gentlemen. Welcome to the weekly wrap-up of the Liberty Call. Today is January 13th, 2023. Hope everybody's having a fantastical week out there. Apologize for not having a video yesterday. Had to go down to the courthouse to renew my concealed carry, and because it expires on Monday, and I had to go and take care of all that crap. And just didn't feel like coming back down to my office after getting back. So anyways, like I said, hope everybody's having a good week out there. Pretty good week in the markets. Things, we had more green days than red days, even though, things aren't excellent out there. We did get a good CPI number this week. Have some news about how that is going to be reported going forward. So I personally like the producer price index as opposed to the consumer price index, because I like to see what the people in business are actually selling products for, because they're going to add in their extra costs a little sooner than we'll see it in the CPI. So, all right, well, let's go ahead and dive into the markets and see how they finished off for the week. The Dow Jones was up over 100 points at 0.33%, closed at 34,302. S&P 500 was up 0.38, closed at 39.98. NASDAQ was up 0.71, closed at 11,079. And most of these were in the red most of the day until at least until after 12 o'clock and, Mountain Time. And so a little surprised to see it, push up, but push up into the green. But again, I guess a lot of people have some high hopes with the good CPI print. The VIX was down 2.92% today. It's currently at 18.28. Canada was up 0.74. Brazil down 0.69. Mexico flat for the day at down 0.06. Across the Atlantic, Germany was up 0.19. UK up 0.64. France up 0.69. The Euro Stoxx was up 0.58. Netherlands up 0.83. Spain up 0.61. Italy up 0.19, and see here, Switzerland flat for the day, up 0.03. Portugal down 0.17. Russian exchanges were split today. The MOEX up 0.64, RTSI down 0.55. And the overnights in Asia were mostly green. Japan was down 1.25, but the rest of them appear to be green. Australia up 0.66, New Zealand up 0.78. In China, the Shanghai was up 1.01%, SCSE component up 1.19, China 850 up 1.85, DJ Shanghai up 1.02, the Hang Seng up 1.04, and the Taiwan weighted up 0.63%. So, like I said, not a terrible week in the markets. Looks like we'll finish off in the green for the week. Let's go ahead and look at the weekly charts. Let's start with the Dow Jones. Looks like the Dow Jones is going to finish the week off up 1.87. The S&P 500 looks like it's going to finish the week off up 2.34. NASDAQ, start at the bottom of the candlestick. Looks like it was up about 3.5%. The Dow Transports up about 3.4, and the Dow Utilities finishes off the week up just 0.84%. But it looks like all of them were in the green for the week, so we'll take that as a win. Let's take a step back and look at the longer-term trend. Let's see here. The beginning of this line starts at the beginning of last year. Again, we can see, we currently are in a bit of an uptrend, but we are pushing up against this resistance line. If I were a betting man, I'd probably say that it'll probably falter sometime early next week. Again, we do have the debt crisis that we're starting to lean up against. I think from an article that we're going to talk about in a little bit, the Treasury Secretary, Janet the Idiot Yellen, says that we'll be up against that number on next Thursday, the 19th. So again, we shall see what happens. But again, if it sticks to the trend, we'll probably we'll have another leg down with a bottom lower than what we had in October. So we shall see. All right, let's go ahead and get back into the economic data for the week and see how that turned out. Looks like we had some pretty good numbers. Jobless claim or initial jobless claims came in at 205,000. Forecast was 215. Last week's number was 206. So we dropped 1,000 from last week, which is good news. The continuing jobless claims came in at 1.634 million. Forecast was 1.705. Last week's number was 1.697. So it looks like we dropped off about 63,000 off of the continuing claims number. The consumer price index came out yesterday. We came in at a 6.5 number. Last month was a 7.1. Came in right on forecast. Let's look at the month-over-month number. So we actually dropped. We had a reduction in CPI by 0.1%. The forecast was to be flat at 0. Last month's number was an increase of 0.1. So all in all, we dropped 0.2% over the course of the last 30 days. So, good news, bad news kind of a situation. But here from the Bureau of Labor Statistics, the January 2023 CPI weight update, starting with the January 2023 data, which will be what will be reported next month. The Bureau of Labor Statistics plans to update weights annually for the CPI on a single calendar year of data using consumer expenditure data from 2021. This reflects a change from prior practice of updating weights biannually using 2 years of expenditure data. So it looks like they're going to compress the numbers probably so that they'll look better going forward. That would be my best guess. They usually rejigger the CPI or any sort of big data number when they want to improve it going forward, not to make it where it look worse. So, the numbers may look a little bit different next month going forward, but we shall see. I'm sure some smart guy out there will probably figure out a way to keep track of it using the old data so we can compare apples to oranges. So, but anyways. All right. The U.S. consumer sentiment number went up from last month. It was a 59.7. It's currently holding at 64.6. Forecast was a 60.5. So in another article I read earlier said that this is the highest reading in about 8 months, which would take us back to about May or April of last year where it was this high. So people are feeling a little bit better than a couple of months ago, but we shall see what happens with that. So, like I said, there wasn't a lot of data coming out this week, like I reported on Monday. But what did come out isn't terrible. All right, so let's go ahead and read through today's market recap. S&P 500 off lows as banks erase losses after kicking off earnings season. The S&P 500 moved off session lows Friday after major Wall Street banks erased intraday losses as investors weighed up a string of better-than-expected results and commentary on a worsening economic outlook. Wall Street bank stalwarts JPMorgan Chase and Bank of America reported quarterly results that beat on both the top and bottom lines, underpinned by rising interest rates that boosted loan growth. Wells Fargo and BlackRock also delivered better-than-expected quarterly results, while Citigroup reported a fall in profits on higher credit costs. The mostly better-than-expected results were accompanied by gloomy remarks on the economic outlook. JP Morgan said a, quote, mild recession, end quote, was its best base case and warned that it was beginning to see a slowdown in its auto lending business at a time when the bank's home lending business has also come under pressure. The latest University of Michigan survey on consumer sentiment, however, pointed to a much healthier economic outlook, hitting a 12-month high, but that was driven by a fall in energy prices, which some believe may prove temporary. And yeah, some of the people I listen to think that oil is probably going to go back up to $120 to $140 a barrel sometime this year. So we're not out of the woods. Granted, we're still not back to a level of production here in the United States that we were at 3+ years ago. We had over 700 oil rigs online. Today, I looked at the number a little bit earlier. I think it was around 620 or 623. So we're still off by about 10% as far as, wells in operation, which, then turns into, petroleum that can be used for oil, gas, all that good stuff. All right. Quote, the narrative has swung too much in favor of lower commodity prices going forward, end quote. Will Ryan, CEO and founder of Granite Shares, told Investing.com's Yassine Ibrahim in an interview Thursday, quote, but that energy is still a sector of the market where there They are big concerns and problems with supply, end quote. Quote, don't look for the price of energy, oil, or gas to be on a linear move down from here. I think that there is still a lot of potential for a surprise up to the upside, especially with the ongoing war in Ukraine, end quote, Ryan added. Elsewhere on the earnings front, Delta Airlines also reported a beat on both the top and bottom lines. The airline's outlook on first quarter earnings between 15 cents to 40 cents a share fell short of estimates amid higher labor costs. In other news, Virgin Galactic said it was on track for a commercial launch in the second quarter of 2023, sending its shares more than 9% higher. Defensive stocks were also a drag on the broader market, paced by a decline in the Lockheed Martin Corporation and Northrop Grumman after Goldman Sachs delivered a cautioned outlook on the sector as concerns about U.S. government debt could weigh on defensive spending. Yeah, I think if you work for one of those contractors, you're probably going to be out of a job in a couple of years, because I don't really see the federal government being solvent for too many more years, and all those wasteful government jobs are going to go bye-bye. So, the good engineers and programmers and things like that, they'll find work elsewhere. And, at least they'll be in the productive part of the economy at that point. But, if you're one of the bottom feeders, yeah, you're probably going to be on unemployment at some point sooner than later. Tesla fell nearly 3% after Guggenheim downgraded the stock to sell from neutral on worries that the company's fourth quarter results due January 25th are likely to fall short of Wall Street estimates. The electric vehicle company also slashed prices in Europe and the U.S. to boost waning demand. The price cuts come just weeks after the EV maker cut prices in China for the second time in as many months. So again, kind of a good news, bad news situation. Some banks are doing good. Government contractors, not so much. All right. Next up, we have an article here. Yellen warns of U.S. default risk by early June, urges debt limit hike. U.S. Treasury Secretary Janet Yellen said on Friday that the United States will likely hit the $31.4 trillion statutory debt limit on January 19th, forcing the Treasury to launch extraordinary cash management measures that can likely prevent default until early June. Quote, once the limit is reached, Treasury will need to start taking certain extraordinary measures to prevent the United States from defaulting on its obligations, end quote, Yellen said in a letter to new Republican House of Representatives Speaker Kevin McCarthy and other congressional leaders. She urged the lawmakers to act quickly to raise the debt ceiling to, quote, protect the full faith and credit of the United States, end quote. Quote, while the Treasury is not currently able to provide an estimate of how long extraordinary measures will enable us to continue to pay the government's obligations, it's unlikely that cash and extraordinary measures will be exhausted before early June, end quote, the letter added. Again, we could probably just stop spending so much money at a federal level and probably fix a lot of these problems. And we could probably, with the amount of Americans that we have, we could probably pay for, at least basic healthcare and stuff for people. I know a lot of the lefties want that sort of crap. But we spend it all on defense spending and handouts to, the welfare recipients that have government jobs. And, hey, we're in this situation. And, unless you're going to cut off the welfare kings and queens who work for the government, they're going to have to go out and find other work. Let's see, diving back in, the White House said on Friday after Yellen's letter that it will not negotiate over raising the debt ceiling. Quote, this should be done without conditions. White House spokesperson Karine Jean-Pierre told reporters, boy, is she not one of the worst human beings on the planet? She's terrible at lying. At least Psaki, could stand there with a straight face and not get flustered. Again, when you're a diversity hire, I guess this is what you get. Yellen's estimate expressing confidence that the government could pay its bills only through early June without increasing the limits marks a deadline considerably sooner than forecast by some outside budget analysts that the government could exhaust its cash and borrowing capacity, the so-called X date, sometime in the third quarter of calendar 2023. As of Wednesday, Treasury data showed that the U.S. federal debt stood 78 billion below the limit, with a Treasury operating cash balance of $346.4 billion. The department on Thursday reported an $85 billion December deficit as revenues eased and outlays grew, particularly for debt interest costs. Yellen said in her letter that the Treasury this month anticipates suspending new investments in 2 government retiree funds for pensions and healthcare, as well as suspending reinvestments in the Government Securities Investment Fund, or G Fund, part of a savings plan for federal employees. The retirement investments are restored once the debt ceiling is raised. Quote, the use of extraordinary measures enables the government to meet its obligations for only a limited amount of time, end quote. Yellen wrote to McCarthy and other congressional leaders. Quote, it is therefore critical that the Congress act in a timely manner to increase or suspend the debt limit. Failure to meet the government's obligations would cause irreparable harm to the U.S. economy, the livelihoods of all Americans, and the global financial stability, end quote, Yellen wrote. Well, again, how about quit spending so much money? I mean, how is it that, living here in Colorado, the state of Colorado manages to fund all the things that it pays for? And there's a lot of libs that live in Denver who force us to pay for a lot of dumb things that I don't agree with. But we managed to do that with 4.5% income tax. But I'm doling out, basically a third of what I make to the federal government, and I don't get crap for that. So, and we have lots of nice things here, in the county I live in, parks and trails and all sorts of good goodies that, if worse came to worse, we could probably slash a lot of that stuff if we hit hard times. But the federal government, I don't get anything for any of that stuff. I mean, maybe I'm just weird. Maybe working in the financial business, I just have more going on up here than the people who work in Washington. Anyways, all right, one last article here. Can I afford to retire at this exact moment? Here are 3 simple rules of thumb to figure it out in 2023. While the Great Resignation and quiet quitting may be sweeping offices for younger Americans, older Americans may have a similar, if more permanent idea in mind these days. With the holidays behind them, some may ask themselves whether they can retire, like right now. That's not to say early retirement is a new trend at all, as the pandemic nearly forced many Americans' hands. As of 2021, about 50.3% of American adults over 55 were out of the labor force and into retirement, according to a Pew research study. That's a significant jump from 48.1% in 2019. But here's the issue. While retirement is rising, so are prices. As of 2021, the U.S. Census Bureau says that mean retirement income for Americans 65 and up was $73,288. Should you live for another 30 years, that means you need $2,198,640, and that's without inflation. Before you panic, let's look at 3 tips you can use to help guide your retirement decision. The 4% rule. When you decide to retire, many financial advisors might give you the rule of thumb to take out 4% of your savings each year. This is the amount you can withdraw no matter what, and hypothetically still have those retirement savings last another 30 years. The main question here is whether this would offer you enough income. When combined with Social Security, pension, and all the rest, if you have $500,000, that would only be $20,000 per year. Yet, if you have $2 million, that would be $80,000. It's also important to consider what you'll spend your cash on, and in the next few decades. While travel might be important when you're in early retirement, don't forget you'll need cash available for healthcare costs as you continue to age. The rule of 55. This next rule of thumb deals with tax implications of retiring early. While some potential retirees will have plenty of savings, it won't be beneficial to retire early if you end up paying normal income tax. This is the case for those retiring after 55. Usually, you'd face a 10% withdrawal penalty for making a withdrawal from a tax-qualified retirement plan like a 401k. But for workers who have an employer-sponsored 401k plan, the IRS allows anyone over the age of 55 who decides to leave the workforce to start drawing penalty-free distributions from that plan. And here's some good advice that I can give out. Do not, let's say you're 55 years old and you retire from, let's say you worked at Ford building cars, and you have your big, you have your your 401k at Ford, and let's just say there's $1 million in there. So if you were to take and roll that, which what most people do is they take whatever money they have in their 401ks and pensions and stuff like that. If they decide to take the cash value of their pension, and they roll all that into an IRA when they retire, so that it's managed by their financial advisor along with their other assets, with their non-qualified funds and annuities and insurance and all that other good stuff. Well, if you say you retire at 55 and you roll that into an IRA, well, you now cannot take the funds from that IRA without paying a penalty. You have to leave it in your 401k until you at least reach 59 and a half. Once you reach 59 and a half, then you can roll it over and do whatever you want with it. So, it's kind of a, good news, bad news situation. Yes, you can retire 4 years earlier than normal and not have to pay the 10% penalty, but you're stuck with whatever your fund choices are in your 401k. And that's usually the big reason a lot of people want to move their assets out of their company plan, is because you usually only have maybe a dozen or 2 dozen fund choices, and they may not be the best for an investment mix, when you're retired. So I only know this because one of my colleagues at one of my previous employers did that, and his client was pissed because he was planning on retiring and he rolled it over. Well, I'm sure I know why the guy rolled it over. It was because his advisor told him to roll it over so he could make the nice commissions on it. Not the best thing to do. So anyways, all right, let's jump back into it. Keep in mind, you will still you'll still be a little while away from claiming Social Security, though. You can find out your full retirement age to take full advantage of Social Security by visiting the Social Security Administration website. There you can find out how old you need to be to receive 100% of your Social Security benefits and what it would cost to retire sooner. It's usually full retirement age for boomers. It's 65-ish, 66, and for people my age and Gen X, it's 67 right now. I'm sure that'll probably get changed once they figure out that they're out of money. All right. You'll need $1 million or more in the bank. A recent survey by Northwestern Mutual found that Americans believe they need $1.25 million to retire comfortably today and continue to receive income for the next 20 years. It's certainly a great idea to create a goal based on advice from your financial advisor and a budget. However, if you're looking to retire today, you need to make a goal flexible. If you're old enough to be thinking about retirement, then we don't have to tell you life happens. You need to have enough saved in case of an emergency, and certainly enough to afford your care if and when you're faced with any health issues. This usually happens around 80 for most Americans, but could happen sooner. It's also important to note that the study found how much Americans believe they need for retirement increased 20% between 2021 and 2022. So who knows what 2023 might bring. Having a flexible goal will allow you to pivot when situations change. All right, some all good little tips there, and even something I added in there for a little extra. So, all right. Well, I hope everyone has a fantastical weekend. I'm going to go ahead and let y'all go. And if you need anything from me, please go to dsafinancialgroup.com. All my contact information is there. Or you can shoot me an email. My email address is right here on the screen. And hope everyone has a fantastical weekend. And I will talk to you guys next time. Adios.